Hey everyone, welcome back to Yuri's Box. In today's video I'm going to talk about TLT, the week ahead. If you like this kind of content, consider leaving a like, and as usual, nothing in this video is financial advice. So, when really talking about the week ahead, we really have to start from, today, and what you can expect on a Sunday, or really on a Sunday, given the fact that, as I've been saying ad nauseum in my previous videos, it's not really about the technicals at this point, and I've been saying that for really ever since I really started making videos. And the reason for that is that I can point to, for example, something like the S&P 500. All right, right here, when we had this dip on March 31st. I could have easily have, and many could easily have pointed to this being a double bottom, easily. But again, as I said, in the lead up to the April 2nd announcement on Trump tariffs, if the announcement is benign, well then yes, it could be a double bottom. But if it's worse than expected, keep away. And basically the moral of the story. And really, I'm not really patting myself on the back. I'm just pointing out that sadly, this isn't a time to look at charts and squiggle around and try to find answers with our drawings. Sadly, we have to wait and see how economic data evolves and how economic policy evolves as well. And the reason why I say the week ahead starts on Sunday is because you really have to keep your eyes peeled for, say, any announcements by Trump on Truth Social, any announcements by perhaps other countries. Keir Starmer of the UK pointed towards announcing, as he called it, the end of globalization, in quite a dramatic fashion. He'll announce that on Monday, rather. But still, as we move forward towards the futures opening later tonight, as we are close to that checkpoint, if you want to call it like that, pay attention to any possible announcements, because things can change at a moment's notice. Trump could easily walk back everything. I mean, I don't think he will, because, it would be political, kind of suicide at that point. But again, it could easily happen. Just because something is ridiculous doesn't mean it won't happen. That's something I definitely learned, in my in my years that I've been paying attention to financial markets. Just because something is ridiculous, remember, doesn't mean it can't happen, just as April 2nd shows. So again, I think the week ahead starts today, and as we move closer towards the futures opening, pay attention to any potential announcements. So that is point number one. I would look for next week. We do have a couple of, candies here and there you can look at for potential catalysts. I would look at potentially, the business optimism index. That is something that perhaps could move things. Overall, the highlight of the week will be the inflation rate on Thursday. At the headline, we're expecting a beat, so really a decline of the previous read of 2.8, which would point us. The consensus here is at 2.6. Trading Economics has it at 2.5. Either way, if we do get such a read on the inflation rate in the United States, it would be consistent with something that I've been pointing towards in my previous videos, which is that most likely what we saw from September to March, to January really, is similar to what we saw last year, well, rather in 2023, where from the fall to really the end of March, we saw basically economic activity picking up because of the holidays, right? Through no fault of its own, on top of an economy that already had more wiggle room than it has today. But regardless, you had the holiday season. So people travel more, people spend more, and that'll keep inflation sticky, potentially. But as winter rolled over, inflation rolled over with it. Okay. Potentially, I've been pointing towards something similar, where from the fall to, again, January, you had some factors like you had in 2023, mainly the holiday season. So again, you get your end of year bonus, you're feeling positive because you're potentially spending time with your family, you're revisiting relatives, you're spending because you want to give gifts to those relatives. Again, you're generally spending a lot more. But on top of that, this year we had certain factors that that made inflation look potentially worse than it in reality maybe was. And I've been pointing towards the port strikes in September, natural disasters, and mainly tariff front running, all right? And potentially, we have peaked in January. Now, I would still pay attention to the read on Thursday, even though it could suffer the same fate that we saw non-farm payrolls suffer, meaning that it could easily be a non-factor. However, given the fact that the market has still to this day, in my opinion, still a bias towards higher rates, and look no further than even the Fed. The Fed is still stuck in looking at inflation, all right? And perhaps they're right, and perhaps I'm wrong. But in my opinion, as I've been pointing towards, ever since I started making videos, I think we're all kind of looking at the wrong thing. We're supposed to be looking at growth, because again, when you're setting economic policy, you have to think way into the future. Rate cuts do little to nothing in the short term. Perhaps some psychological effect, maybe, but it's not 25 basis points that'll save an economy. All right. When you're setting economic policy, you're setting the economic policy for 18 months out. All right. That's the way I think about things. Rate cuts and rate hikes work with a lag. You need to give them time to get through the system. Okay. So at this point, again, I would favor rate cuts, and I expect the next meetings to, whenever they start cutting, because, I don't know when they'll start cutting, but I expect them to cut, and I expect them to potentially, if this continues, again, if you continue to see this downward pressure on growth, I think that the next rate cut could be a 50 basis point cut. But regardless of that, sorry if I went off on a tangent there, but I still believe that there is a chance that inflation could actually deviate from what we saw happen on Friday with non-farm payrolls, given the fact that we still have heightened inflation fears. So I could easily see, let's say, if it comes at consensus, it could easily be a non-factor. If, however, you start seeing it perhaps going above, that could spur some fears. Again, I think that either extreme here is potentially unwelcome, because, again, if it comes above consensus, you could point towards inflation being way too sticky, and that could, spur even more fears about inflation. If it comes in too cool, it could indicate that, potentially growth is really starting to falter. So I think that the market will find comfort in the consensus if that is what the market gets. So again, it could easily be a non-factor, but given the fact that we are still in inflation PTSD regime, as I call it, I could easily see it having an effect on market. But again, I don't have any strong feelings about how markets will react to it. I think again, everything is a second order really when it comes down to the week ahead. Everything will depend on the ongoing tariff drama. Like, if I'm not mistaken, April 9th is when the reciprocal tariffs take force. And honestly, the biggest catalyst, as I was just about to talk about, is April 9th. Again, if I'm getting that right, whenever the reciprocal tariffs take force, that is the second checkpoint of the week. So checkpoint 1 is as the futures open later today. Keep an eye out and see if we get news, if somebody walks back something, if we get further retaliation, indication that we're going to get retaliation. Again, that is checkpoint number 1. What happens as we move towards futures openings? Does something happen? And if nothing happens, again, you can expect more of the same, honestly. Checkpoint number 2 is April 9th, if again, that is when reciprocal tariffs take force. See, again, the same thing as today. Look to see if people are retaliating, and we are still in the escalation phase of the event, or if people are beginning to potentially walk back and immediately you go to the negotiating table. I think that today and Wednesday are potentially the days to look at. And as long as inflation is well behaved, I expect that to be a non-event. Given the fact that, again, we're talking about March data, the only way I could see it, again, as I said before, I could see it being a factor, and again, I could easily be wrong, is if we see any of the extremes. If we see hot inflation, then we have to worry about inflation, and that's how the market will potentially react. Potentially, one thing you could say is that if inflation came in hot, it would tie the hands of the Fed even further, potentially lowering even the level of the Fed, so-called Fed put. If on the other hand you get something on the other extreme, so inflation getting, coming in really, really cool, something like, I would say 2.5 and below, that could be further reason for the Fed to cut. Again, because you could get something like we saw last year, if you recall, in June, I think. The June, the June CPI report was really too disinflationary at a certain point, and really helped spur some of the growth fears that we saw as we head into the summer. So again, today and Wednesday, again, if that is when reciprocal tariffs put in place, that's what you really have to pay attention to, in my opinion. On the background, you have inflation, and finally, a round of initial jobless claims. I would still look at them, and just for as far as the next unemployment report is concerned, but we're still away from that. So keep an eye on initial jobless claims and see if, again, we continue to put in the higher lows I pointed towards in my previous videos. If this indeed is a higher low, let me get away these shenanigans for for initial jobless claims. We don't want to do this is already way too much, squiggling around on on the charts for initial jobless claims, to be honest. But keep an eye out for initial jobless claims. If you keep on seeing them kind of drift up, as we have seen so far, again, you can expect more of the same. And I think that everything at the end is tied to really the tariff drama and the fiscal tightening, however strong or weak at magnitude it is, it's still a factor, in my opinion, that you need to consider. But again, number one thing to look at is, do we get any news on tariffs? All right, and checkpoint number one is later tonight when futures open. As we get close to that, to the opening of futures, do we get any kind of news? And after that, look for April 9th when tariffs, reciprocal tariffs, get put in place. Look to see, again, if you get any news, if you get anyone walking back tariffs, if you see anyone retaliating further. Again, this is a developing event, so anything can happen, and I would stay nimble. As far as TLT is concerned, as long as the tariff drama continues, I would expect TLT to continue to have somewhat strength. Now, it is true that we haven't seen potentially explosive moves yet. We have seen the dollar suffer as well. And I have read some doom posting, honestly, on the dollar, because in the fact that the dollar is going down potentially is an indication that the world is kind of rejecting US assets. But I read a thread, Anna Wong retweeted it, and I'll find it and I'll link it in the description below, which gives possible an explanation to why we've seen the dollar suffer as of recent. And mainly, we can point back to something like the yen carry trade. As the yen carry trade unwinds and other carry trade unwind, you see a selling off of assets, of dollar-denominated assets, and a return to the original currency. Meaning people that had yen, bought dollars, and bought stocks with those dollars, sell stocks and sell dollars for yen. And you potentially have that for a lot of other currencies when compared to the dollar. I wouldn't make too much doom posting just yet. Again, this is one of the risks that honestly is out there for TLT. That again, we just see a complete rejection of US assets, but I still think that is way off. Again, knock on wood, but as long as tariff drama continues, people will seek risk-off assets, and TLT has been through hell. And given the fact that now we have actually a yield on the risk-off asset, it can actually do its job. And I think that is what we're beginning to see. And again, if you get more of the same on the tariff side of the drama, expect more of the same on the chart. I wouldn't get too I wouldn't try to rush things. Okay, this is an ongoing process, and again, even before tariffs, my expectation is that TLT would have moved up, but it would have moved up mainly in the summer. I think that the summer is when things could potentially kind of culminate. And now this is really getting a bit too ahead of the video, the scope of the video, but if people potentially drag their feet meaning people, I mean leaders, drag their feet with tariffs and kind of try to put on this macho show that I've been pointing towards, I'm going to retaliate because I don't want to look like a wuss in front of my electorate. That could be a significant headwind to growth. And in my opinion, and this is all I'll say, it raises the chances, number one, that we actually have put in the secondary law that we usually see on TLT. And as if you recall, TLT, I pointed at these two examples in history. In 2006, 2008, it was a lower low. And in 2010, 2011, it was a higher low. TLT has a habit of putting in double bottoms. And really, it's either one of a kind, right? Either it's a sweep of the previous low or a higher low compared to the previous one. So far, this seems to be the secondary low, being a higher low. And as I was saying, if this drama continues and leaders continue to drag their feet, potentially, it raises the chances of this being the secondary low. And you can start thinking about potentially breaking out of this bottoming pattern, the squigglies. Now, this is the one time I pointed my squigglies on the chart. But that's, again, a story for the summer, in my opinion. I think there are many, many things you have to keep an eye on. This week is going to be rock and roll, as things stand right now. But again, things could change fairly quickly. Remember, just because something sounds ridiculous doesn't make it less likely. April 2nd, teaches us exactly that. I'm not expecting Trump to walk back anything, but would I be surprised if he walked it back? Absolutely not. Just because it's ridiculous doesn't make it, impossible. If you had to ask me, I would expect some retaliation like we saw in China, okay? Simply because if anyone bows down immediately, it just points to weakness. And again, as I was saying just now, that doesn't mean it can't happen, all right? You could easily see European leaders just capitulate. I wouldn't be surprised by that. But again, it leads to weakness. So you have to see how things evolve, 50-50. So I'll leave it at that. Again, TLT has a lot of, a lot of things to sort out this week. And with TLT, I really mean the market in general. Remember, 2 checkpoints. Later tonight when futures open, look to see if we get any new announcements on tariffs. Checkpoint number 2, when we get reciprocal tariffs put in place, meaning, the 34% on China, the 20% on Europe, and the 10% on penguins. Look to see if anything changes potentially. Look to see if we get any kind of news, and if it's good news or bad news. If it's more of the same, as I've been saying, expect more of the same. All right, I'll leave it at that. If you like this kind of content, consider leaving a like. And I'll see you next time. Enjoy your Sunday. Try to take a break as much as possible. All right, bye.